Everyone watching MRVL is asking the same thing right now. How high? The stock surged 32.5% in a single session, FOMO blazing, yet the rally may be overblown. What matters is the 94% yield on its 7nm PHY chips. That yield alone flips the margin outlook dramatically. The lab ran the numbers. Lab score, 71 out of 100 by MRVL skyrocketed 32.52% because its 1.6 terabit per second optical DSPs completely monopolize AI cluster interconnect bandwidth. Wall Street chases GPUs, but the bottleneck is the DSP, digital signal processor, translating electrical data to light. At 1.6 terabits per second, copper cables fail due to high thermal dissipation and severe signal degradation. Marvel's Orion DSP utilizes PAM4, pulse amplitude modulation, a signaling scheme doubling data rates, to beat Broadcom's Xeon architecture. This advanced 5nm silicon monolith is the mandatory hardware tollbooth for scaling cluster sizes beyond 100,000 nodes. Today's massive surge to $290.79 reflects the market finally pricing in this absolute physical choke point. Quarterly financials showing modest revenue momentum for MRVL. MRVL surged 14.5% because hyperscalers are aggressively funding custom silicon to bypass NVIDIA's high-margin hardware monopoly. By Q3 2026, escalating tariff policy friction will compress Marvel's gross margins by 120 basis points. These basis points, hundredths of a percentage point, represent critical product profitability. The macro wave is shifting. A normalizing yield curve, the graphical relationship of interest rates, accelerates capital deployment. Recession risk sits at a low 7.3%. Yet, trade policy threatens the supply chain. New tariff threats act as severe friction for Marvel's packaging partners in Asia. As Cleveland Fed's hammock warns of inflation, keeping rates at 3.63%, Marvel's 27.6% revenue growth faces a geopolitical wall. Software moats are evaporating, forcing capital into physical hardware infrastructure. MRVL reported earnings per share of $0.80, missing the Wall Street estimate of $0.81 by 0.9%, a miss that raises questions about near-term guidance. MRVL is trending higher, currently at $290.79. MRVL just printed a 14.5% spike on what the press release calls accelerating AI demand. But let's decode the real language. Management is leaning hard on interested parties and call me TM links. That's PR for low attendance earnings calls. Meanwhile, insiders net sold 255,060 shares in 90 days. That's not confidence. That's cashing out while the AI narrative still prints. EPS missed by a penny last quarter, breaking a 4-quarter beat streak. R&D is up 6.4% YOY, but at 25.3% of revenue. It's burning margin to chase a pipeline that hasn't delivered. What they're saying, AI demand is robust. What the lab hears, we're overspending on R&D to paper over a growth stall. The momentum breakdown for MRVL. RSI sits at 86, pointing to overbought territory, signaling caution on new entries. MACD is currently bullish, with the histogram crossing above zero. Marvel's massive rally to $290.79 is driven by the rapid production ramp of its 1.6 TPAM, 4 optical DSPs, digital signal processors that translate electrical data into light signals to scale next-generation artificial intelligence clusters. But here is what breaks the bull thesis. An overbought RSI, Relative Strength Index, a momentum indicator measuring speed and change of price movements, of 86.6 signals extreme exhaustion, while heavy reliance on TSMC for fabrication exposes Marvel to severe cross-strait supply chain bottlenecks. Our AI score of 71 out of 100 reflects high conviction that if hyperscaler spending holds through next quarter, MRVL will breach its $290.79 resistance, the price ceiling where selling pressure halts upward movement. Otherwise, expect a swift correction to support the price floor where buying interest prevents declines at $160.01. Marvel's 5nm custom AI die is shipping to hyperscalers right now. That's the signal. Have you traded MRVL before? Profit or lesson? Tell us in the comments. This isn't financial advice. We break down the engineering, not buy or sell calls. Markets change fast, data gets stale, and every trade is your own risk. Past moves don't predict the future. Do your own research before you pull the trigger. The lab's back tomorrow with another deep dive.